Now, let's get back to our guest this morning, Jonathan Barratt of Commodity Broking Services. Jono, before the break, you said fundamentals can't really support the rally in commodities, but you're still bullish on copper and natural gas as well. Why is that?
As Linda, I think with copper it's quite interesting because we're at a balance point in terms of supply and demand. And if you think that a lot of growth has come back and we're at a balance point at this stage in the market, then you can surely see that any dips on copper, I think, will be well supported, and I think prices eventually will start to pick up when the recovery. When we look at what's happening in China, when we're seeing 3 straight months of record inputs, there's a lot of stockpiling there for various reasons. So when you sort of combine the supply-demand story, the market's virtually in a balance, that when we start to get any uptick in the recovery, then you're going to find that there's not going to be enough metal to actually go around, and therefore prices for copper will go higher. Natural gas just hasn't moved. If anything, it's at a major low if you look at some of the charts, and I feel with this recovery that should also recover. So I think natural gas to me is a little bit of a standout down below that $4.
You talk about copper being stockpiled in China, but aren't you concerned about, questions about whether China can really sustain the growth that it's looking for?
Yeah, this I think is interesting because, see, China's stockpiled throughout winter and they're stockpiling through summer. They're continuing to buy the commodity. And I think what you're looking at and what people aren't realising is that there is a plan behind this stockpiling. Remember, there's a lot of jobs which have been lost. There's a lot of infrastructure going in. There's $585 billion worth of stimulus package going in. So a lot of this is going to be used. And when you look at it, you can see primary inputs in, create infrastructure employment, and when the rest of the world starts to get out of this recession, there'll be a lot more orders for copper. And of course, as China is the engine room for a lot of these outputs, then you'll find there'll be more orders, and then China will be in a perfect position to be able to supply the rest of the world with needs like copper.
Okay, copper bull, give us your estimate for that metal. I mean, where do you see copper headed by the end of the year?
Well, 250 is something we've had. Obviously, we're going to see a little bit of a pullback, but I can see copper trading up around that 280 through to 300.
Hey, Jono, before we let you go, I want to talk about oil, pick up where we left off. I mean, the U.S. saying oil will get back to 110 a barrel by 2015, 130 by 2030. Yeah. India and China possibly using more of that commodity. Is that what you're expecting? Is that in line with your own projections?
Well, when I look at oil and see where it's gone and where it's actually going to go over the time, I think we've already spent a lot of time looking at alternatives. I don't see prices continuing to motor on to 135 over time. I think we're going to see more of a technological shift in what we do with that 1 litre of oil. So, if anything, I think it's too far to tell whether or not we'll get up there. Okay.
Jonathan Barratt,
yeah.
Thank you.